Welcome back to Whiteboard Finance. My name is Marko and I'm here to help you master your money and build your wealth. Today we're talking about the top 3 stocks to potentially buy in October of 2018, and without further ado, let's get right into it. The first stock on our list for October of 2018 is Salesforce.com. Salesforce.com Inc. is a cloud computing software company headquartered in San Francisco, California. Their biggest driver of revenue is their CRM application, Salesforce. Salesforce recently hosted their annual event. It's called Dreamforce, where analysts, investors, users of the CRM platform, and all members of the Salesforce community are invited to celebrate everything that is Salesforce related. There's an entire day at Dreamforce dedicated to analysts and investors or potential investors in Salesforce. So Mark Benioff, who's Salesforce's CEO, is quoted as saying that we're in a macro environment right now that bodes well for enterprise software spending. Part of this is due to strong economic growth and changes to tax legislation. So although I don't think he's pro-Trump, he may have been happy that those tax changes have been made. A lot of the analysts that attended Dreamforce were upbeat on the stock, some saying that they were impressed with the amount of top-line momentum at the company, even after eclipsing $10 billion in revenue. So this is a good sign because it shows that Salesforce has a deep product base with a lot of good R&D in terms of research and development, and they have such a strong and loyal subscriber base that a lot of these companies don't really switch. So that enables them to sell a lot, hence the $10 billion in revenue, but still have a lot more earnings potential at the end of the day. Salesforce has high demand because more and more companies are turning to cloud-based solutions. This, along with excellent product innovation and customer loyalty, means that Salesforce could be a set-it-and-forget-it stock within your portfolio. That's the biggest reason why I chose it as a potential buy for October of 2018. Let's take a look at the one-year returns. The one-year return is right around 67% at the time of this recording. The 5-year returns are at an astounding 211%, so you're pretty much tripling your money there. And its current price is right around $158. The target price that I'm estimating Salesforce to go, and take this with a grain of salt, I have it at right around $171 per share. Stock number 2 is Micron, ticker symbol MU. Micron Technology is an American company based in Boise, Idaho. Micron produces RAM, flash memory, and solid-state drives, and its consumer products are marketed under the brands Crucial and Ballistics. A lot of you gamers out there may know this, that are avid shoppers or people that like to build their own computers. They're very familiar with both those brands. Micron has definitely had its ups and downs, and we're probably in a down cycle for their business. However, the reason I chose Micron for October is because of a recent investor and analyst meeting with their CEO, Sanjay Mehrotra. Much of the conversation in this meeting focused on comparing the current period with the 2015 and 2016 down cycle. Mr. Mehrotra, the CEO, sees 3 key differences. Number 1, Micron is executing significantly better in 2015 and 2016. This is best exemplified by bit growth and product costs versus their biggest competitor, Samsung. So following a year of significant bit share gains in 2017 for Micron, Micron is estimated to grow DRAM and NAND bits in line with Samsung in 2018 and also slightly above Samsung in 2019. The second reason why I picked Micron, and the second reason that the CEO gave, is that the balance sheet is much stronger in 2016, giving the company more flexibility to reinvest in the business and repurchase stock for the first time ever. Number 3, competitive behavior of the market share leader Samsung is a big reason why I chose this stock for 2018. Analysts believe that Samsung is planning to curtail its memory chip output next year to maintain high levels of profitability, as well as delaying the expansion in the upper floor plans of its facility to 2020, which should restrain growth in 2019. Let's take a look at the one-year returns. One-year returns for Micron have been at just under the S&P 500 at 11.84%. Its 5-year is in the neighborhood of 168%, which is great. The current price right now is a little bit lower. I mean, it's been up and down, for about a year now. But right now it's at about $46 a share. And the target price that I have set for Micron, again, this is down the road, I have it at $69 a share. The third stock on our list for October of 2018 is Facebook. So Facebook is a social media, I'm just kidding. If you don't know what Facebook is, just, I don't know, just unsubscribe. No, I'm kidding, don't do that. The reason I chose Facebook as a stock to buy in October is due to the recent shakeup of its executives. Specifically, I'm talking about Instagram. On Monday, October 1st, the co-founders of Instagram, Kevin Systrom and Mike Krieger, had resigned from Facebook. This is big news, you guys. So this management change could accelerate Instagram's monetization strategy. So there was an unspoken culture clash regarding the former co-founders and also what Facebook wanted to do with Instagram in terms of monetization. Now that those two guys have resigned, we will start to see more advertising, unfortunately, on Instagram. If you don't follow me on Instagram, go ahead. It's a great account, which I believe will lead to another or bigger stream of revenue for Facebook. So as of right now, this may actually blow your mind. I didn't know this until I researched this a little bit deeper. Instagram has more than 1 billion monthly active users and 25 million businesses on its platform, which is huge. Instagram does not charge for shopping tools as of yet, so I see e-commerce as a big opportunity if shopping link conversions prove effective. The one-year return for Facebook, the owner of Instagram, has been actually negative 4.42% at the time of this recording. The 5-year has been 234%, which is to be expected. They've been doing great over the last couple of years. Its current stock price is at $159 a share, and my target is in the neighborhood of $203 a share. So there you have it. Those are my top 3 stocks to consider buying in October of 2018. I hope you got value out of this video. These videos do take a long time to research, outline, and put together. But if you subscribe to WhiteBoard Finance, which you hopefully already do, wink, wink, nudge, nudge, hit the subscribe button. I try to give this to you in a easily digestible format. What takes me a couple hours to research gets relayed to you in about 10 minutes. So if you want more videos similar to this, please hit the subscribe button, give it a like, and share it with a friend. Thank you so much and have a prosperous day. Okay, I'm going to draw Facebook's new logo. I don't know if you guys can see this okay. That was terrible. That was supposed to be the pyramid with the eye on top, seeing everything. I'm done.